Ottawa's spring market is picking up, but the story underneath the headline numbers is a lot more complicated than it looks. And if you're buying or selling right now, the difference matters. We just got the new April 2026 numbers from the Ottawa Real Estate Board, and CREA also dropped a revised national forecast last month that you need to hear about. There's also a new CMHC housing supply report that has some real implications for Ottawa specifically. I'm going to walk through all of it, what the data actually says, what it means for your neighborhood, and what the smart move is depending on where you're at right now. If we haven't met before, I'm Eric Bekkers, an Ottawa realtor with eXp Realty. Now let's dive in. Let's start with the fresh Ottawa data. In April of 2026, 1,336 homes sold in Ottawa, down about 2% year over year, but it's up significantly from March, with only 1,075 homes in March. So month over month, this is a solid jump. Spring market is showing up. The average sale price in April came in at $712,000, up 0.8% year over year. The median at $650 was flat from last year, so prices are holding. They haven't collapsed, but certainly haven't taken off. We're sitting in a narrow, stable range. Year to date, 3,839 homes have sold, just down 4.4% from the same period last year. So the market is slower than 2025 on a cumulative basis, but the trend is improving as we move through spring. New listings had a big jump in April with 3,258 units. This is up 19.3% year over year. This pushed the active listings up to over 4,500 listings. This is a lot of supply. The sales to new listings ratio came in at 41%. Balanced market territory starts at 40%, so we are sitting on that line. 3.4 months of inventory overall. Here's the breakdown by property type, because this is where it gets interesting. Single family has 3.1 months of inventory. Townhouses, 3 months, the tightest segment. But apartments, 4.9 months. This is meaningfully softer. Median days on market moved to 21 days, which is up from 18 days a year ago. So homes are still selling, but they're taking longer. So April's activity is actually reflecting a market that's gradually regaining momentum. Buyers are beginning to re-engage. More listings are helping to keep conditions balanced across most segments. That's an accurate read. This is not a hot market, but it's also not a broken market. It's balanced, transitional market with real opportunity in it if you know where to look. So let's get a little bit deeper. Now, I want to spend a minute on this because the headline number is actually hiding what's happening at a more neighborhood level. Ottawa Centre, which has a high concentration of condo apartments, is experiencing a noticeably softer condition. More inventory, slower absorption, fewer sales relative to recent years. This is directly tied to the condo segment, which is by far the weakest part of the market right now. Suburban Ottawa, call it Orleans, Canada, Barrhaven, it's very balanced, but the western suburbs are outperforming right now. More consistent sales activity, slightly tighter inventory conditions. If you've been watching Barrhaven, Riverside South, Canada, Stittsville, those areas are actually holding up better than average. If we get into a little bit more rural markets, Greeley, Manotick, North Gore, Metcalfe, this is a slower pace overall. Homes are taking a little bit longer to sell. For buyers in that range, you have a bit more choice and more time than you did a year ago. Now, the big part of this is because their homes are sitting over $1 million, and that segment is significantly slower. The homes under $1 million are still moving extremely quickly. One recently had multiple offers, 4 offers within 1 day, and sold over the asking price again. Now let's zoom out to the national picture, because neighborhood is important, but what CREA just did with their forecast is also worth understanding. In April, CREA actually downgraded their 2026 housing market forecast. The reason? A jump in fixed mortgage rates driven by an oil price-related inflation spike raised the odds of a Bank of Canada rate hike. Now, we just had another rate hold, but there's more and more signs that increased rates are coming. The bond yield increased and fixed rates followed, but now you want to keep an eye on the variable rates. So CREA's senior economist actually flagged that the higher mortgage rates at the most active time of the year, April, May, and June, could keep a lot of buyers on the sidelines as they wait to see if rates will come back down. So what does this mean for Ottawa buyers specifically? If you're on a fixed rate, your carrying cost just went up compared to where it looked a few months ago. If you're considering a variable rate, you have more choice, potentially less competition right now. Either way, this is why current pre-approvals through a broker you trust, not a number that you got 6 months ago, matters a lot more than ever before. For sellers, this reinforces what the Ottawa numbers are already showing. If your price isn't realistic based on current comparables, you will sit. The buyers out there right now are paying attention and they have options. You need to be positioned as the best home in your neighborhood. Now, if we move over to the Canada Mortgage and Housing CMHC report that they just released, this has some more context for Ottawa. National housing construction rose 6% year over year in 2025 to 259,000 units, with activity exceeding the 10-year average in almost every major market. For Ottawa specifically, rental construction is what dominated and raised total housing starts to near record levels. That's actually a meaningful shift. It means the rental market in Ottawa is loosening, which is directly relevant to first-time buyers. When renting becomes less painful, some renters will stay renters for a longer period of time. When the cost of renting is comparable to owning, which is still the case in many Ottawa areas right now, the pressure to buy remains. So here's the concerning part of the CMHC report for the medium term. Condominium pre-sales have collapsed and unsold inventory has surged. These conditions make it difficult for developers to reach pre-sale thresholds needed for financing. This puts future condo supply at risk. The headline number that should be on every Ottawa buyer and seller's radar is Ottawa Gatineau has the second largest housing supply gap of all major Canadian cities. The region has not kept pace with increased housing demand since the pandemic. This is the long game. Short term, inventory is elevated, buyers have more power than they've had in years, but the structural supply gap in Ottawa hasn't been solved. So what does this actually mean for you? Let me be practical. If you're a buyer, this is genuinely a reasonable window. More homes to look at, more time to make decisions, conditions back on offers, real negotiations happening. Townhomes and single-family homes in the south and west end of Ottawa are still the most competitive segments, 3 to 3.1 months of inventory. So don't expect to lowball there. Condos, especially in the core, have more room for negotiation. The one thing I'd watch right now, get your pre-approval updated. Rates have shifted in the past 6 to 8 weeks. Number you got earlier this year probably doesn't reflect what your payment actually looks like today. Do that before you make an offer. Now, if you're a seller, the listings competing against yours just jumped 17% year over year. That means your presentation, your positioning, especially your price, matter more than they did last spring. The Ottawa real estate data is clear. Homes priced correctly for their neighborhood are still selling in 3 weeks or less. Homes that stretch the market are sitting, and every week they sit, it gets harder and harder to sell. If you're in the western suburbs, you're in the strongest segment right now. If you're in a rural market like CREA or Manotick, you need a little bit more lead time, patient strategy, and your home needs to show excellent. Those can be a different conversation. So that's the April 2026 Ottawa market update. The headlines make it sound simple, balanced, stable, gradually recovering. And broadly, that's true. But where you are in this market, your price range, your property type, your neighborhood actually changes everything. So if you want to talk through what any of this means for your specific situation, my free buyer or seller consultation is in the description. We'll look at your exact area, your numbers, and what the right move actually is right now. So drop a comment. Are you watching the market right now as a buyer or seller, or both? I want to know what's holding people back right now, and I'll try to address it directly in future content. Hit like if this was useful. Subscribe if you want the real Ottawa data every month, not generic market takes, actual numbers from your city. See you next month.